Good afternoon, folks. Welcome back. We've got 7 minutes, now almost 6 minutes until close. What has happened so far today? Well, money coming out of tech, going into value still. It looks like the exact same amount that's been rotating as before. So that's the only consistent part. The rest, growth, doing its normal thing. We've obviously been trying to preempt these moves. Didn't get anything preempted today. This move up into the resistance, it's been acting just like normal levels, so trading back down to the level. So again, our portfolio is value trades. Value is up today. Again, value is up again today. And what I'll say is, again, when there's down times, this is about 1.5%. Big difference, right? Big difference. So again, portfolio is on that side. We tried to preempt this trade. We are still in the consolidation. We know we're in a consolidation. We're trying to preempt the move out of the consolidation just due to an understanding of what comes next. Instead, we're just actually trading in these levels, which again is bound to happen. We're trying to play some probabilities. This trade here at support will be great for tomorrow if that's there. Another chance to take a stab at that. Otherwise, we're still within the consolidation. Things have not changed in that sense. Small caps are coming down to the support we were talking about, which again, this is the average. The individual companies, like those of banks, will be good pickups at the lows, since we are expecting higher highs. Let me put it on like XLF, for instance, right? You look at XLF, large banks coming back up today. Don't like the candle, but on the small cap side, the percents are very different. Energy up today on the on the value side, and with some fun news of the Suez Canal being blocked, which it's happening at the same time as there was an expectation of things going back up, but let's not fully the reason, right? Not fully the reason. But otherwise, there are some take profits. Again, it's sort of the exact same. It's not the exact same, I'll say, sensitivity to yields that we've seen the last 2 weeks. Part of our hypothesis of trying to preempt the growth trade coming out of its low, that we shorted to the low, and now we're trying to take long out of the low after a couple weeks of sitting down here consolidating, is that there were going to be less sort of sensitive to the yields, which we're selling a little bit due to the yields, but we already know this anyway. I've talked about this is the base, but we're trying to take a trade out of that, understanding that this base is the reality here, and we're going to try to take the trade. Some of the selling is, again, directly related to those yields increasing, and understanding that the value trade is better. It doesn't mean that equities can't be bullish, right? So we'll see what our reaction is coming down into support here. Again, we try to preempt trades. That's why your portfolio shouldn't be all about trying to guess trades, right? Yes, we're trying to preempt trades on the growth side, but our portfolio is on the value side, right? So that's an important distinction that gets lost in translation when screen time is being dedicated to trying to find fun growth plays, right? Keep that in mind. We saw some travel news, things like the cruise ships coming out, CDC saying November 1st. I wouldn't say got lucky, but that sensation this morning of when this was up at pre-market and then opened up during the day, and I didn't get into this trade. I was looking, right? I was looking, and I was like, I don't think we can get this today. I mean, pretty close to. If this would open down here and then the move started, that would be a different scenario. It was up here. There was no trade to take up here. And then here's the news. Obviously, a lot of this pricing yesterday is directly related to it. This is almost break even on the day. This was 7-8% on a lot of tickers yesterday. That was all selling before it came out, right? Obviously. Because again, I talked about it. This candle didn't make much sense. It was overselling, but it wasn't overselling in the same sense as like over here, right, where we came back up. We talked about that. We weren't going to be buying that, right? We weren't going to be buying when it looked like that. We were looking for some sort of, again, the same thing as when we look at sort of like GE or something. With this move of overselling when we buy it, there has to be some reason other than just randomly buying on price going down, right? We're not professional guessers or gamblers, right? We try to maximize risk reward. That's all risk, right? That's all risk. So that's probably an important distinction. The other thing was pot stocks. Pot stocks came out. I think there's some confusion about how news works. About how news works. Usually it gets sold on that happening, right? So if you take a look at GRWG, which is what we were long on, nothing happened over here. Nothing happened over here, which probably confuses some people. By the way, New York is passing legalization, whatever. That's what the whole thing is about. When something like, here's where it is, right? And then it doesn't matter. Again, that's how this works, right? That's how this works. So some of you that then all of a sudden thought it would be a good idea to go buy pot stocks as soon as that happened, that's really interesting rationale. And I don't know where you got it from. It definitely is not for me, right? Definitely not for me, because I talked about buying down here on support, and I've talked about this enough times recently over here. Anything that goes against the idea of this going to the upside definitely would not be buying. So whatever. Anyway, some interesting things there, of course. Now, what about like travel? Will I buy travel off of these lows? Yeah, not right this fucking second. But yeah, I'm definitely bullish on the idea. Do I think that things are going to go back to what we consider normal? No, I think what's happening right now is normal now, right? I think we're going to always have some problems like this now. I don't think things will be normal. It's normal right now, right? It's normal right now, besides the fact that you can't go on a fucking cruise. Sure. It's not trading with, this is not trading on the fact that no cruises are happening right now. It's trading on future. So again, as soon as there's an understanding, okay, now it's November 1st, you push the timeline out, that translates to some sort of value here in price, right? It has nothing to do with the fact that, oh, right now, since there are no cruises or no traveling, no, I mean, there's going to be limitations into the future, of course. Again, I talked about this. We couldn't take these trades on the airline side. And what's going to be important here, and I talked about this morning, and I'll go over and do a wrap up on macros and stuff in a second, is I talked about how some of these, there's no easy trades, right? There's no easy trades ever. And if you're average, you'll lose money. You have to be above average to make money. It's really easy to look at something like this. And yeah, airlines, I talked about it. Airlines are going to, if this pulled into the trend line and then you buy on the trend line and prices up here in a couple of weeks, it's really easy to go, oh, well, that's why I knew to do that. No. And it's like if you bought down here and you hold through everything, like, are you supposed to hold through this from yesterday here today? Like, that doesn't, no, you don't hold. No one holds. You don't hold through this. If you got this gain here, what did we do? We literally took profit on it because you were given a gift. Price should not increase 8% there, so you take profit there. If you're still in this position, do you hold through this? No, that doesn't make any sense. And again, hindsight capital is going to do the thing where this is going to go up in the future at some point, right? Everything's going to go up in the future at some point. It's the timing we don't know, and there's going to be hindsight capital going, well, see, that's why I held through this. I knew to buy on that. No, that's ridiculous. No one's buying on that shit. I talked about it with like Viacom or something, right? We're going to buy this down here just because we're bullish on it. And again, the same thing with like guessing tops, guessing bottoms. No. Are you going to be more successful guessing bottoms every single day? Yes. But that's not what we do here. So we don't do that. We're not going to buy that right there, right? That's not what we do. It's the exact opposite of what we do here, right? We we're certainly not going to do that. Now, let's take a look again at the market. Okay, Dow, break even on the day, a little bit positive. It took some profit there towards the close still, right? Another 20 basis points in 5 minutes there with the rest of the market. Still, it's so important from the all-time high, 2% here, right? 2%. And again, the gain that happened through here, comparing the value side, you still can feel the same. Again, we've been getting the same rotation every day. from growth to value. Even though we're trying to get in early on some growth trades for the next sort of leg, it's still important to see that a lot is rotating here because it's holding its value, right? This is not losing value. It's yes, it's losing time here, but that's how price works, breaks out, consolidates. This consolidation here is so much more bullish than the rest of the market, right? It's important to still see this and understand what we're trying to do here in retrospect of that. Now, so that's where this Qs are down about almost 2%, over 1.5%. S&P down 0.5%. Again, not as bad over here as either because again, it's tied into other parts of the market that are doing generally well overall in a trend sense. Again, one day does not matter. So again, it's not the day doesn't matter. Even what I've been talking about the last few days of how I'm talking about equities are going to be risk on, it's really easy to then go, oh, well, the market was down today, so I guess that's off. Now we better go the other way. That's just bad. That's not going to happen. You're never going to hear me do that. So again, let's stick in our lane. Value continues to do well, even under circumstances where the market's going through some selling and rotation of its own, still does well. And in terms of trying to preempt trades, there's always the risk of trying to enter those trades early before anything is there based on our rules that we try to get, and we're going to get stopped out, right? Got stopped out again on trades that through the last few weeks I've been shitting on, saying we're never going to touch those. I don't mean never. I mean just in this moment we're not going to touch them. Right now we're trying to take these trades. They're not working. We took a Peloton trade, and look at where it is today. We're right back to break even, right? It's going to happen. Does that mean you need to stop trying to take those trades? No, because the next time you take that trade, maybe the trade is up here, right? Is it going to be up here in the future? It's going to be. We just don't know the timing. So we have to take the trade when it's at that support every single time. Otherwise, you're not going to get it. Because again, hindsight capital will go, well, see, I told you. No, we don't know. We literally have the same information as everyone else and making decisions with the exact same price as everyone else, and we have to make a decision at different times, and that's it, right? Again, we understand that growth is not as bullish as value. The idea of inflation, reinflation, the idea of the economy coming back is the baseline now. There is no such thing as knowing if it's there or not. Before, when we were trading value coming out of the election, it's important to understand that this trading that we did from here, and when we were trading this, what those are, when we were trading this out of the election and this big rotation day, November 9th, right? All of this trading here is before we get confirmation of reinflation and that the economy is going to be booming. This is before. It's all the speculation that it might happen. That's what we were trading on, speculation. This over here is the realization that it is happening, right? And that's, again, this is how markets work. We are driven by flows and speculation. That's it. Flows over fundamentals, and speculation is the true sort of generator of price here with those flows, right? No fundamentals, no solvency, none of that shit actually matters in the moment. Are people trading here? What is this price movement here? If people bought all the way up here, then why are they selling right back to where they started? Did something fundamentally change here? Did anything change in any sort of in any way? Technically, anything? No, nothing actually changed anywhere in here. It's all the same. It's literally the same. So again, we trade past all of this, right? We're going to do the same thing that we usually do when things come into support and come down into selling. We buy it. We're preempting it a little bit this time because things are different this time in the fact that growth has not been a trade that can be taken because of, again, the rotation into value. Betting on equities in general is not a hot take. It's, again, you're a contrarian if you bet against equities because equities have gone up for the since World War II. Since World War II, equities have been in a bull market. If you consider one trend line. Yes, the Great Recession happened and the market was down for, a little bit of time. Even if you bought in a few years before that, you would still be up though, right? That's just the reality, right? The only time that there's really an example of this is buying tech right at the top of the dot-com bubble. That's the only difference. If you bought at the top of the dot-com bubble, it would have taken you 10 years to recover that. That's one of the only examples of, is that where we are right now? Again, that example of buying at the top of the dot-com bubble, like Amazon. You bought Amazon at the top of the dot-com bubble. You would have waited 10 years to break even. Is that the situation we're in here? Are we really thinking that's the same thing? It's just not. Right? We just understand in a lot of ways that it's not. Right. Anyway, definitely a fun candle. I would say the volatility is the aspect of betting on volatility last week. If any of you put straddles on in the way that I talked about from last week, when we're betting on those convexity trades, right? Betting on gamma, you're betting on more volatility the next week. We're certainly getting it, and I don't mean betting on like the VIX. Again, I think I've made this clear plenty of times. We're not talking about this at all. This is just broken. There's nothing happening here at all. Fib says short VIX. Okay, good luck. Good luck. Have fun over there. Have a lot of fun over there. That's not correlated to anything right now. Everyone should be, again, when you're betting on things, you want to use it with the IV, right? You want to do it with IV. And when I talk about the convexity bets from last week, if you straddled anything into this week, you were doing very well, right? Think about everything where the prices were and how prices have moved. That's exactly what you're betting on, is movement and speed. It's a very good way, and I put it in that writing piece a little bit. It's a very good way to, when using the hedge word is not a very good word to use, but it's a very good way to make complementary trades. And so when we came into this week and finally started talking about growth a little bit, if you use the idea of betting on gamma on those growth trades that you're not really sure if it's going to be up or down, and I did this again with the Apple trade a few weeks ago. What you're actually doing here, again, this trade here, when you're betting on upside or downside, but really all your trade is saying is that price is not going to be here. It's going to be moving up or down. Again, that's a convexity trade, and you're betting on gamma. You're just betting on speed and betting on volatility. These trades very much will protect you on upside, downside, because again, even though we have not gotten direction, you've got movement, which will get you paid, right? Those of you trying to make preemptive trades that maybe got hurt trying to get those trades, again, your portfolio should be tied towards the value side. But if you try on these preemptive trades, if you're trying to get those and capture that move, try to use maybe straddles the next time you do it, and you're going to see a very big difference in probably protecting your downside if you have a hard time protecting your downside, right? Those of you, again, we're trying to take a lot of trades that aren't happening right now. And again, it's against sort of the bias because we want to be early. Using that straddle will actually protect the downside when this does happen. So for instance, we're right back to where we started on Apple. Are we going to take profit up here? Of course not. Absolutely not, right? But by having a straddle, you would have actually still made, you would have actually been in a very different situation, right? You're not losing on both sides. Or really, you're not losing on a side. You're just back to break even, which is not the same as if you have calls, where if you're buying calls, you have a timing factor and you have a price factor where you're actually going to have to get stopped out much sooner based on the underlying, right? So we'll see how that goes in tomorrow. Again, we're going to keep up the aggressiveness on trying to preempt things. We're just holding our value trade. We obviously got into energy a little early. Again, this sort of thing here, I don't like that some of the points came off of news, so we're going to be very sensitive on this trade from that preemptive move. Again, there are things tied to news. I don't know how much of it priced there. It could be a bit of a meme, but the crude going up so much definitely ties into this. So is this going to come up to here? You have no idea. We're going to be a little bit more sensitive if there's a downside move and maybe wait for a little bit more confirmation there. Because again, the whole Suez Canal thing is kind of, it's just sort of silly, right? The other thing I'll mention is, again, on the healthcare side, this has continued to do very well. So if you're in this trade, we've done exceedingly well when the market is volatile. This is again, another way to bet on, I wouldn't say betting on volatility, but this is definitely betting on movement in the sense that we've been talking about with the trend, right? You're betting on movement on this trend, which is very different from price movement that's up and down and sort of you don't really know, right? take a look again at these. I talked about this morning. It's very important to see when the market's down and then it seems like it's really hard to do anything. It might be because your portfolio is tailored to just trying to get in and out of trades too much. If all your portfolio right now and you have nothing in value and all you're doing right now is when I'm over here trying to dick around, trying to get early trades with growth, if that's all you're doing with your money right now, then that's not good, right? So again, this is sort of a protective way, something to at least be in. The one other note I'll make, and I'll say this in sort of it's sort of a retrospective thing, and we already know this. Been in a long Bitcoin position since last year, right? At a very low point. So having that up like 600%, having that and having a significant amount of portfolio in sort of alternative sort of assets like that, but especially if they're up, it helps a lot with some of the struggles of trying to pinpoint everything day to day in the equity market, because that's a very different type of trading, because you're not trading it. You're just in and you don't need to even think about it. It's just a long-term sort of thing. That's very similar to this idea. You're just in healthcare for the long term. I'm going to talk about, we'll go on Friday, talk about weekly charts. I brought this up a little earlier. Using some of the weekly charts and just being in a position for maybe weeks at a time, I think will help with a lot of the volatility we're seeing right now, so that we're not looking day to like candle to candle every day and intraday, because some of it again is you don't need to. It's more of, is it going to be up in a month? Okay, well then let me make a trade for that. That will usually get you paid more, which again, the example is if you just bought the S&P, if you bought the S&P at any point, you're up. You're up. And I made the joke of S&P is never going to be down 34% in a day. S&P will never be down 34% in a day like GameStop is today. Yeah, we shorted it, and some of you didn't make money on shorts. Maybe we'll talk about that in another time. Maybe we'll talk about in a few minutes. But the idea that trying to trade this and make this work is not going to happen, right? You're just trying to time things, and it's lucky. Us trading it to the upside is just professional guessing at that point. It's not the same thing, right? S&P is never going to be down 34% in a day, right? And you don't need to bet on earnings every day and all this shit, right? Just bet on sort of the long term. And again, that's sort of where I brought it back to, is the roots of equity market's going to be up, guys. Don't bet against it, right? There's times when we can do that. We shorted tech, right? But even then, you're doing it in a very short amount of time, and you're trying to squeeze between the lines of when things are happening, understanding levels, right? Keep that in mind. What does Fib say? Fib says, I haven't participated for a while now because every time I ask a question, you are put down. When did you ask a question, Fibs? You said short VIX. And then 5 minutes later, you said, I am asking Don. I'm pretty sure I didn't put you down, my friend. But you said short VIX, and I said, before you said that, I was talking about the VIX is, and I say this every day, that the VIX is just wrong right now. The VIX is only correlated to the downside, and even then, look at the performance over here. And so again, I talk generally. I don't, unless I actually bring your name up, I'm not talking about you because I don't know who you are or care, unless I'm having a direct conversation with you. So definitely no one should take offense to anything I say. And I talked about it this morning that I'm not critical of anyone here. And so if you guys get butt hurt, that's from your own and you caring about things a little too much yourself. So this is a fun atmosphere. Chill. Anyway, the comment on the VIX, if you don't understand what I was saying, is that we can't do anything over here. The problem is that when we're looking at volatility, in a lot of ways, we should be able to use the spot VIX and have it go sort of hand in hand with the market and understand that, okay, if there's going to be volatility, spot VIX should be rising, right? Leading into that, maybe leading into an event. So for instance, leading into FOMC, Fed Day, or leading into something, again, we had the obvious leading into the election, right? It's very easy to spot on this chart where the election is, right? Oh, there it is. It's trending up into it. It's not just a spike. Right now, volatility is getting pressed down so much. And a lot of this is because all of the volatility bets are not being done with volatility. I've talked about this before where most of the time you have to look at the derivative, right? You have to use the derivative. Look at the derivative. There's a reason we haven't looked at this chart in a long time. Why? Because no one's actually using any of the volatility ETFs or ETNs to trade volatility. They're doing what I'm talking about right now, which is this convexity sort of trade, and we're using options. We're actually using the derivatives of the actual underlyings themselves that we want to be betting on for volatility. So the same with volatility traders themselves. Volatility traders themselves are not using spot VIX or its derivatives because it's better to actually bet on volatility through the liquidity that is given through the derivatives of the underlyings of the other charts by making convexity bets, which you're longing gamma by putting straddles on. A long straddle is a very easy way to do that. It's still very risky. I've talked about it. It's still risky to do that because if you're not getting it out of a consolidation, it works for us. And I bring it up because we trade out of consolidations into breakouts or breakdowns. And so at that point, it's at the most tight it's going to be. And we've already seen the breakout. So betting on that, betting on volatility to come, like we did last week. We bet on volatility this week. We didn't do it through volatility, right? Through the traditional sense of, oh, let's go pick up UVIXI calls. UVIXI calls, well, this doesn't seem to have really helped us, right? So again, that's what I'm talking about because I've talked about it every day, this idea of betting on volatility next week. We're not talking about this, right? We're not talking about the spot VIX before, and in the past we definitely have. But I also talked about this morning, this idea of correlation. At a time, you could correlate things with the volatility index. Absolutely. Right now, we have no correlation. There's correlation to the downside, but even now, there's not much correlation to the downside, and it's not even reactive. And it's, again, if people aren't betting on it, then it's not going to happen. And what's going on with the market right now? The underlying is the derivative of the options market. That's the reality. So this is supposed to be reacting to something, but it's not because no one is betting on it. No one's actually using this. Yeah, there's algos out there doing shit, but again, it's because they're actually trading through a different function, which makes a lot of sense. It actually, in terms of being an on the margin trade and in terms of risk reward, it makes a lot more sense to just bet on what it is that you're fucking talking about over here, which is, again, that, okay, I expect prices to move next week faster than they did this week. Oh, that's volatility, but I can't use this because no one else is using it, so I'll use what they're using, which is, again, this function of convexity bets, right? Which is just you're actually just betting on volatility, and you're actually betting on an implied volatility change, but it's not technically just that because, again, that's our premium level. That's really what dictates premiums. But I'm going to use this as an example. GME, if you put puts on, and I talked about this morning and why we're going to talk about now, we talked about it. If you put puts on at the very end of close, you probably didn't make money today on your puts. Maybe by the end of the day, you've now made money. Did anyone in chat have puts from close and did not make money today on GME puts? I'd be very interested. And this is what I talked about from earlier in the day. If you didn't put these on at open, and it's very akin to when we make weekend trades, we put it on from the open as much as we can because it helps having all of that day of either gaining, or if it's losing, then we can make a better decision. But having all of that in front of us, we have the whole day in front of us. And so that 6.5% that we gained on the puts was actually a larger gain than anything you gained today, which is a crazy thing to think that you gain more on your options for this 6.5% here than you did for the 34% over here on the puts. That's actually the actual number. You would have gained more for this candle than this candle. That right there is, again, has a lot to do with a trade getting crowded. Why? Because everybody knew it was going to go down. Everybody knew, and so everyone got in the trade. Mobsky made the point yesterday that the price was going up intraday, but the puts were going up in value. Again, that's just due to the fact that everyone's buying it and willing to pay a price for it. The other thing to remember here is when I'm talking about this convexity idea, this gamma idea, what is happening during all this time here? Premiums are exploding because I don't want to use implied volatility because implied volatility is the change of volatility to the moment. Now, I'm talking about an expected volatility that is this bet. If you look at the premium prices, premiums rose through the fucking roof. Why? Because Wall Street owns about 90% of GameStop and they were selling calls out of their ass. They are going to make more money. I mean, they've made more money right now. Today, they lost 34%. If you had shares, you lost 34%. Do you know how much they gained on all the calls they sold? Probably 10 times as much as they lost here. Probably 10 times as much. I mean, it's probably more than that, right? It's probably more than that. So they might own 90% of the shares, but they made all of the money here by selling calls, right? If you wanted to really short this, it was selling calls, absolutely. It was absolutely selling calls, and I talked about it yesterday. Those 800 calls that expire this Friday were $5.50 a piece yesterday at close. Yesterday at close, $5.50 for an $800 call. No one even knows how out of the money that is, but that's like a who knows how far away. Astronomically far away. $5.50 for a premium, and there was 15,500 OI on it. And there was more volume coming in that day. Buying up those calls that are at 800 that are never going to pay, and those expire this Friday, right? You could sell anything you wanted. You could sell any calls you wanted. So again, institutions just did the same thing again, and they're charging insane premiums. Some of the premiums, the at the money premiums were like $200 yesterday for contracts that expired this Friday, not even months out. Excuse me. So again, it's so interesting to see the way in which some of these things happen. It's an important thing to see because it's this trade or this chart here, and with the values, makes it a little bit more obvious to see this idea of how these prices will change based on the volatility that's going to be coming in, or if you're betting on the volatility, right? It's important to see how these changed and how even over here how things change, because a lot of it's already priced in on the derivative. And I talk about this, and it's not easy to show or see, is the difference between the option charts and the underlying chart. A lot of times they look very similar, and they're going to be very similar, depending on, again, the timing of everything. If it's very short term, it's going to look different. But it's important to see when these bets are coming in on the options, because, again, they are going to lead the underlying. Unless they need to then react, which, again, if things are reacting to the underlying, then it's probably has something to do with the bets being overcrowded, right? A little overcrowded on the bet. It's important to remember what we talk about with options being sort of, they're really causing everything, right? Things don't move. Things are not going to happen unless someone's betting for it to happen, right? It's just not going to happen. So a lot of the times it's hard to see. What do you think about this here? Why do you think this is down so much today? Do you think it's because something really fundamentally changed with the value of GameStop? Did all of the memers all of a sudden have paper hands instead of diamond hands? Like, are we in meme territory here? Or do you think it's because everyone just went to betting to the downside, and so it caused price to come down? The result here, and you can finally see it in this chart. You can't see it very easily in other charts. You can see it looking at yesterday into today, and even just the week leading in. Everyone is betting on it to go down. That causes it to go down. That's the reality. It will cause it to go down. It's that sort of that factor, and I talk about it with betting. And like if Greg is, we're betting on Greg to do something, and we tell Greg, listen, Greg, we'll give you some of the money if you do this, do something stupid, then he's more likely to do it if he's going to be able to make more money out of it. It's an incentive, right? We are incentivizing each other to, it's really, this is leading into a momentum trade discussion, but you're generating momentum by doing that, and it's causing this momentum, and everyone starts to then continue to put on and pile on, but it's also going to cause the result to also change. It's very important to see how all of this betting against caused this to go down, which you don't usually see in the same way. Usually when we talk about sort of a gamma squeeze where market makers are buying the underlying to, again, hedge the calls, we usually talk about the downside being the exact opposite, where market makers are selling the underlying because they no longer need to hedge the calls. It's that, yes, but that's them over here. This more grounded sort of selling through here is more their speed. This here has a lot to do with this betting part, because again, the calls have. Is anyone hedging an $800 call that expires this Friday? No, no one's hedging anything. You only need to hedge as you get close to at the money. Was there any gamma to the upside? Was there any gamma coming in, and there was a chance that any of those calls, past 250 even? None of these calls up here are being hedged, which is where the majority of them are. Right? So it's important to realize that market makers are not hedging for those. And that's, again, the problem that occurred over here, and then why everyone bet against it. No one cared about the earnings. It's just an event. Think of it as an event. No one cared. No one listened. I mean, it was a travesty that they didn't put any memes on the earnings call. But yeah, I mean, either way, silly, very silly. Anyway, for tomorrow, it's gonna be very. I'm very interested to see how much more rotation comes here, based on what we saw today. Again, this is up. It was basically up today. In looking, we went over 1% on the Dow again. Now, we had take profit at close, but still overall positive on the day. Turns this into a very interesting day tomorrow, because this level of bid that came in here, again, a lot of this due to opening action. The bid that came in here shows a lot of rotation still happening. I would say it's still the same amount of rotation, but based on the way the market's been feeling, with willing to put money into growth, it's not more, it's not less, it's just the same. But you'd expect everything to be climbing together. It'll be interesting to see if everyone just says, you know what, let's just keep pushing this trade here. So again, if this climbs through the high tomorrow or something, that's a lot of points to put on. But again, it's entirely possible to see. This is holding value in a very strong way, showing that it still has a significant amount of upside, and it's still a place to have. Again, if you're in long trades as an institution, where do you want your money? The thing that's just holding value and just continues to climb, or the thing that's fucking volatile out of its mind, right? You want it in something like this. We just had a lot of banks and everything talk about how they're actually bullish on the super cycle idea and how they like oil, even though they understand that demand is not going to come back in the same way. They still like that. That's like the energy bet. There's a lot of things here to think about. The other thing I want to talk about real quick, we'll get out of here, is the whole semiconductor angle, right? There's so many interesting sort of things that are happening over here, and then this kind of price action today. This is, again, this is news here, so you have to remove some of the news here. You have to remove some of the news here, but some of this price action today is very, very against a lot of the market signals. And so now, again, you have to talk about, okay, we just got news that was good for INTC and sort of bad for other companies out there in competitives, right? This candle here, what is this candle here? This is a level of volatility and a problem to solve. This is not something to shy away from. These candles are not something to shy away from. This is a problem to be solved and money to be made, right? Money to be made one way or the other. One way or the other, because somebody... The market here doesn't know what it's doing, because otherwise this price action no longer makes sense, right? It's these kind of things we can't be running away from, right? Same with, again, I'm not specifically talking news. Again, we're not trying to trade news and try to get everyone has the same information, but these sort of situations with candles here, that there is a lot going on this side of things, presents a very interesting opportunity. Again, we're not very bullish on growth compared to value. But there is a problem to be solved here on the semiconductor side, because everything is really relying on this side of things. So again, there's going to be, what is this? Is it the low? Is this going to come lower? Should we bet against it to the downside, upside? I'm still going to say upside. It's just the timing factor is certainly wonky. This might be a good time of overselling. Same with when we made the original travel trades from these lows here of overselling. When we took those, we had an understanding. These might be very interesting trades. I mean, it might just gap up sort of in a similar way here tomorrow. We'll see, because again, Asia's really quite messed up right now in terms of its value. Holy shit, RAD is down 20%. Brian says CVS, WBA, RAD's down 20%. What's going on there? Good thing we're not in these trades anymore. Jesus Christ. Oh, CVS hasn't moved. I don't see CVS. WBA? Or is he just talking about red? I only see Rad making a move on TradingView at least 20%. Holy moly! Maybe I didn't read it. Is it on Bloomberg? What a time! What a time for us to get out of that trade. Wow! Imagine making. Imagine buying up the entire option chain and then getting out before that. Wow. Let me see. I'm interested. I don't see anything. What's it say? Wait, what? After it's down because of guidance on soft flu season. What? Again, here's where trading on news is bad. You don't trade on news. Your news here is Rite Aid is down because of guidance on soft flu season. That's not very helpful. Definitely not. Okay, well, now we have some really interesting numbers. I like that. Now I like that. What is WBA at? WBA is down 3.5%. It'll be interesting to see what happens here. When I talked about, so WBA again is the one, this is where I bought up the option chain. We created an artificial gamma squeeze. Those of you that weren't here don't know what I'm talking about. You can go see back on the 5th, that video, see exactly what went on. Then we got out of the position over here. I talked about over on this candle here, how the next week would open up break even. We got that. This is holding here. It's going to be interesting to see how, if any news affects this or not. There's a lot of interesting things happening here. The thing is that nobody's really in there anymore. Everyone, we built up momentum on March monthlies. March expires. Now it's a whole new ball game out here. We'll see how much news affects that. If Rite Aid's down 20%, this is only down 3.5%. Those are very different things, which might be something interesting to analyze a little bit there. What's CVS at? It's only 1% as well. That'll be interesting. I wonder if this is at 1853. This is right on support. That's, I mean, 1853. It's on support tomorrow. That might be interesting tomorrow, just for like again, it might be there might be some risk. I mean, there's obviously a lot of risk. I'm saying there might be more risk than usual, but there might be an opportunity there based on what we've seen so far. And also, you know what we just did with WBA? Maybe we'll do that with RAD if there's no one in the chain tomorrow. If no one's there and it holds its value at open, then, and I talked about this, we might want to do this a bit more because it didn't take very much money to cause WBA to climb, and we saw like an entire market move, which is, we're not going to talk too much about it, but there might be a possibility of, if this is here, we'll see. I'll think about that for tomorrow. That might be something to think about. Might be a little bit of fun too. Everyone's kind of, you know, we're stuck in long-term trades. We're stuck in, no one wants the dirty Dow, huh? Everyone's in the dirty Dow, but no one really wants to be here. This is just the reality that we're in. We were in energy banks for a few months, leading the year. Now we're consolidating in a long fashion, and it's not very sexy, but money doesn't need to be sexy, right? Whoever said cash was sexy? But that should definitely be interesting. Let me see. I don't think we have anything else here. I think overall, a lot of volatility today. Again, in the moves, in the ways that we spoke about. Again, a lot of these, I would just say the things that we bought yesterday on the energy side, I talk about like XOM, right? We bought these on support and based on the candle. So I know there's some news trading. We're not news trading. So again, anyone that thinks otherwise, again, we took this trade because we're trying to do a little bit of preemptive stuff right now because of how the market's trading. So again, we're in long-term sort of value trades, and it's not the funnest thing in the world, but making significant gains there is fucking fine. We're not doing anything that's too out of the box with things like the difference between this in the RAD chart, right? RAD's down 20%, this is down 20%, but we're not buying Viacom at the low here, right? because there is no support here. It's different, right? So again, the differences between those are like TME, right? TME was at support over here, and now it's not. So we're not going to take that trade down here, right? So again, think about common sense wise. Okay, we had a great trade here, and then we had all morning to sell, right? All morning, and we already wanted to get out because of the trend line. Talked about it from open. You got all morning to get out. You have all week, all year. Over here, we were talking about we're looking. And what do? We have a daily candle that pulls into support, and then a daily candle that opens on support and goes to the upside. That's where we're buying. We like those 2 daily candle sort of situations. We don't ever really do this, and we never make this trade intraday, right? China, we talked about last comment. China, we talked about it's going to be bullish. Now it's not, right? Right now, it's having a hard time. We were betting over here that it was going to go to the upside. We got this one candle, and then this week started, and China is just having some woes over there on the growth side. We're not going to be betting on any of these kind of ideas. So NEO and everything else, we were looking for NEO, low entries. None of that's on the table, right? Until this consolidates. And guess what? It's going to need to consolidate significantly. So it's not like this starts to come up and you go, oh, now I can do stuff. Same with growth, right? It needs to consolidate. We understand growth's consolidating, but reminder, if you're watching China action tonight, you're watching the Hang Seng and it's up like 2%. Who cares? It's been down 2% every single day for like the last month. So let's chill, right? Again, we don't traditionally buy like that, right? We're buying support, but when it's bullish, right? When it's bullish, we're pulling a stretch and trying to preemptively guess that the tech is going to be bullish here because equities usually are, right? So that was today. I had a lot of fun. I think we had a lot of fun in terms of price action sort of being all over the place, which is, again, a level of volatility that's good for us, helps with our form of trading. We don't need to trade every single day. We don't need to, scalp back and forth. We try to take trades, get the volatility, or we get stopped out. I will see you in the morning. Enjoy your night, your evening, your afternoon, wherever you are. And until then, in Fibs, buddy, no one's putting you down. So, hopefully everything is good over there. You want to make some money, let me know. Have a good one. But I mean, no, you shouldn't be so bad. I'm literally don't care. So no one's putting you down. I promise you. No one's putting you down. And if you think so, and you want to be like that, then good luck. Get out of here. Who cares? Who cares? We're here to make money and have fun, like the memers in chat, like Ecto. Ecto's memeing. Brian's memeing somewhere. I think Brian's playing Minecraft right now. That's how much he cares. Ecto's sad face. Memes are fun. We're just trying to have fun and make money. That's what it's all about. I'll see you guys in the morning. I'm going to keep posting level charts as well. Probably another 20, 30 charts as well.